Hello and welcome back to Global Value. In today's video, we'll be performing a fundamental stock analysis of Occidental Petroleum Corporation, ticker symbol OXY. Occidental has been in the headlines recently because Warren Buffett has taken a significant stake in it as part of the Berkshire Hathaway public stock portfolio. Currently, Berkshire owns about 15% of Occidental's shares outstanding, and they have additional warrants for up to 24% of the business. With those warrants included, Berkshire's stake in Occidental would be their seventh largest holding in their public stock portfolio, just behind Coca-Cola. So Occidental is a multi-billion-dollar stake in their portfolio. At the time of recording this video, Occidental is trading for just over $70 per share. Year to date, Occidental's stock price has done extremely well. They're up 139%. Going back over the last year, they're up 167%. We can see that their stock price has really rebounded since this huge pandemic dip. They were down in the gutter from about March to November of 2020, and since then they've really just taken off pretty much in a straight line up and to the right. Going back 10 years, we can see that even with this huge increase in their recent stock price, Occidental is still down about 20%. They're down about 2% each year. This, of course, does not include their dividends, and Occidental has been a very large dividend payer. And going back to 2005, the earliest years ticker has data for, Occidental stock has returned just under 5% compounded annually, again, this not including dividends. So we can see that Occidental is just off its 52-week high, and it's more than triple its 52-week low. Occidental is a large business. They have a nearly $65 billion market cap. For some background about the business, Occidental Petroleum is an independent exploration and production company with operations in the United States, Latin America, and the Middle East. At the end of 2021, the company reported net proven reserves of 3.5 billion barrels of oil equivalent. Net production averaged 1.1 million barrels of oil equivalent per day in 2021 at a ratio of 75% oil and natural gas liquids and 25% natural gas. Occidental Petroleum Corporation was founded in 1920 and is headquartered in Houston, Texas. So now that we have some background about the business, let's get right into our fundamental analysis. We'll be performing an 8-pillar analysis as popularized by Everything Money, taking a look at 8 different financial metrics to come to a holistic beginning understanding of Occidental as a business. So let's get right into it. So starting off with pillar number 1, we want their average 5-year PE over the last 5 years to be below 22.5. So currently, Occidental Petroleum is trading at a 10.5 times earnings multiple, and over the last 5 years, they traded at about 34 times earnings. So pillar number 1 is going to be an X to start off. Next up, pillar number 2, we want their average 5-year return on capital to be above 9%. So we can see that Occidental's return on capital has fluctuated quite a bit. This is not surprising given the fact that Occidental is an oil and gas company, so their returns on capital are really going to depend on the price of oil compared to what they're spending in their business. Averaged out, Occidental's gotten about a 3% return on capital over this time period, which is below that 9% metric, meaning that pillar number 2 is also going to be an X. Pillar number 3, we're looking for 5-year revenue growth, and here we see that they've more than doubled revenues from $12.5 billion in 2017 to $25.9 billion, almost $26 billion in 2021. So that's our first check on pillar number 3. Pillar number 4, we're looking for 5-year net income growth. This one's going to be a check too, although they've had 2 years of negative net income in 2019 and then again quite significantly in 2020. But back-to-back checks on pillars 3 and 4. Pillar number 5, we want their shares outstanding to be decreasing. We don't want a business to be issuing new shares and diluting existing shareholders. Over the last 3 years specifically, with quite an uptick since the pandemic started, Occidental has had about a 20% shareholder dilution, meaning that as a shareholder from 2017, if you've held firm over these last 5 years, your one share is now only entitled to about 80% of the earnings that it would have entitled you to in 2017. So that is an X on pillar number 5. Pillar number 6, we're looking for free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It's the lifeblood of any business and can be used to pay dividends, buy back shares, pay down debt, make acquisitions, or reinvest back into the business. So we can see that their free cash flow has increased quite dramatically from about $1.2 billion in 2017 to about $7.5 billion in 2021. So that's going to be a check there. So even though they had negative net income in 2020, they actually still had positive free cash flow. So that's a good thing to see. Over this really difficult period where oil at one point was negative, they've had positive free cash flow in all 5 years. So again, that's a check on pillar number 6. Averaged out, Occidental produces about $2.75 billion of free cash flow each year in an average year. We'll use that in pillars 7 and 8 when we evaluate how Occidental utilizes leverage and how their current market cap compares to that free cash flow profile. So pillar number 7, we want their net debt, which is long and short-term liabilities minus cash and short-term of cash equivalents, to be below their average 5-year free cash flow multiplied by 5. So at the end of last year, they had $28 billion of net debt. Multiplying their average 5-year free cash flow of $2.75 billion times 5 brings us to $14 billion. So that's going to be another X on pillar number 7. They have quite a bit of debt employed in their business. So far through 7 pillars, we have 3 checks and 4 X's. So the big pillar of them all, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20. So currently, Occidental has about a $66 billion market cap. Multiplying that average 5-year free cash flow of $2.75 billion times 5 brings us to $55 billion. So that's off by about $10 billion here, and that's going to be an X on pillar number 8. Lastly, I want to take a look at how Occidental is returning capital to its owners. So Occidental in years past has paid out a very large dividend yield. So I just want to see if this dividend is healthy, if this is supported, and this is sustainable over time. A big mistake that investors can make is blindly chasing dividend yield. And so looking at their dividend profile compared to their free cash flow profile, both with per share metrics, we can see that they significantly slashed their dividend from 2019 to 2020, and then farther from 2020 to 2021. So they pay out very little dividends now compared to what they used to. And we can actually see that their free cash flow numbers per share are very, very healthy compared to what they're paying out in dividends. They paid out a minuscule amount of dividends last year, and they're focused a lot more on debt repayment, which is probably more prudent. Over 2022 so far, they are increasing this dividend number. So far, they've already 4x their dividend from this 4 cents per share to nearly 16 cents per share. So they're trending back in the right direction. But overall, Occidental, with below average returns on capital, is once again focusing up on shoring up their balance sheet and returning cash to shareholders. So with the rising price of oil, those focuses are good to see that Occidental's management is engaged in prudent capital allocation. So in summary, Occidental checks the box on 3 out of 8 pillars. Again, they are now the 7th largest position in the Berkshire Hathaway public stock portfolio, right behind Coca-Cola. At the time that Berkshire was doing a lot of its purchasing of the stock was trading between this $40 to maybe high $50 range. So at $70, it does look like it's a little bit outside of that buying range that Warren Buffett himself was buying this business at. And that was evident to us by looking at their free cash flow profile in pillar number 8, where they're just about $10 billion over what we'd feel comfortable paying for the business right now. So with that said, that's it for today's stock analysis of Occidental Petroleum Corporation, ticker symbol OXY. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about Oxy with me, and have a great day.